Ta-da-da-da. Doc here from North America. Happy Tuesday to you all. It's another fun-filled week as we march along here in Tradingville for the last 2 months of the year, I guess you could say. That's what it really comes down to. Is we're looking at the last month and a half of the year, and the markets yesterday at one point the stock indices in the United States all saw all-time highs, and it sound there everybody has an opinion, and there's always some type of, I don't want to call it spin, but there's always some type of interpretation of what the fundamentals were for it. We follow our math, but we even get involved at the same time, kind of trying to figure out what ignited it, what made it explode. So there's a lot of different things there. Yeah, there we go. Got a nice comment there. And one of them was let me just answer that. Let me just answer that real quick on a text. There we go. Just have to answer that text that's coming in. Let's get that all out of my way. There we are. All right. So what we're probably figuring is we thought it was Corona, and we got to wonder because looking at, you can see here this morning, you can see the dollar is rising here with the Swiss. You can see that, and what's interesting more than anything else is going to cable. We're seeing a lot of strength here in the cable. There's a lot of pushback. We see that with this C19 cure of a 90 percentile success rate. So a lot of the markets, get swung back and forth, and different economies get swung back and forth, mainly for, those specific reasons. That's the way we look at it. So, it's good to hear that there's a way of reducing the C19 issue altogether and getting back to our reality. And that's where we are. All right, now let's go back to the. That's my logic there. That's what I wanted to get out of my head. Now I'm done answering all these traders asking me questions from my own institution. What else can we say about that? Then you can see, as I always say, I like watching the dollar against the Swiss nowadays. It gives us a good insight of what's going on. At the same token, we switch real quick over to, and you can see it on the J4X there, lifting up, and I guess we closed in the daily buy right there yesterday. Do we have that on the fact check spreadsheet? Let's see, 21. Yeah. So we got to put a line in there. So we'll put that line in there like that. And you can see it lifted up. And then you can see on the euro, the opposite reaction going on to the cable. The cable's lifting up. You would think that the euro would be lifting up, but they're buying dollars. So they're buying dollars. They're buying sterling, British pounds, and they are selling Swiss, and they're selling euros. Interesting. Maybe it's a continental thing, concerned about the continent. But I trust following the Swiss dollar pair. I think that is the most insightful to what's going on with the dollar. Now you can see cable breaking away from that. So you say, what is Doc talking about? Is he talking out of both sides of his mouth? That type of thing. No, I think that there was a major panic when it comes to locking down Great Britain, and now that there's a C19 cure, you can see it's lifting up from that. And a lot of traders here, we've talked about the idea of seeing the cable back at least up into the 134s, and it seems like, let me go back to that. It seems like that's where they are at the moment. It's starting to head back towards that direction. Let's see, I know we're over to 32s, that's for sure. Yeah, there we are at 32s, and there's a lot of concern that we're not concerned, but thinking that we're going to see this region here met again like that. And you can see here we've been in a weekly buy, and it does seem to remind me of the beginning of a big move on the upside. It's a ABC, and this could be the B, this could be the C, and they may go take out that top there. And then you see there's the 35s. If they can clean up their situation, that was December of last year. If they can get this C19 put away and this hard Brexit put away, then we are going to be pretty happy about seeing how that all plays out. And that's where we are. So, what else can we say about that? I guess that's about it. Now I guess what goes, we'll take a look around the, the generals, I guess you could say, or like Canadian. You can see Canadian showing a little weakness here, and you can see it's trying to lift up. But overall, the big pairs trades do seem to have some solid trends developing out of them, which is nice because we want to see those solid trends develop. We want to see some consistency. There you go. Good morning to you. Let me see. I'm just going to call you Double A. It's like Amelie. Double A, Doc, thank you for your post and your explanation. It is possible if you would kindly explain to us the settings of the indicators on your screen. I apologize for my poor language. Oh, don't. You think you're bad. You should see me spell. Forget it. I mean, you just spelled like twice as good as I do. So no worry. We'll fight to figure that stuff out. Well, what we do is what we do is we look at J4X. We're using J4X, and what we do is let's widen this out a little bit. And what we're doing is instead of looking at these indicators right here as just their height and their low, or their low and their high, we look how they compete against each other. That's what we do. We look at things, and so it's a relative thing. Okay. Now, when we go and look at our Chicago Quant website right here, we tried to put some indicators. I tried. Let me see. There we go. Let's see if I can find this here. There it is. There we go. I need to paste that. And so what we do is we try to put some indicators together to make it look or follow, what it follows our math. So we have a public one there using J4X. Let's go back to that again. And where is it at there? Let's see, right there. And then we're looking at it on a relative basis. There we are. And then what it's doing is it's trying to emulate the characteristics of my mathematics. I think that's the best way to describe that. So in other words, when you let's see if we can do this right here. So you can see right here, our white line. This is our intraday daily, or not intraday. This is a daily. This is a weekly signal of our quantitative analysis, and that is the way we look at things. And then what happens is that we're using two stochastics here, a fast and a slow D, to just watch the relative difference between the two trends. And that's, I guess, a good explanation for what you're seeing on the J4X, which is two public indicators, and in the purple line, one is a slow stochastic, one's a fast stochastic. We're just showing you the D's, and at the same time, we're using the CCI and trying to make it emulate. And then you see the bars The bars are hinky-ashy. They have a correlation to our dots about 70%, which is pretty good, which is very good, actually. And so, and so, what you have is relative relationships. And so it emulates our proprietary mathematics when we look at my weekly and daily signals. And you see the quants underneath. This is the weekly quant, our proprietary weekly quant. This is our daily quant. The lines we throw in there is just to remind you that it has changed its trend. And that's the whole objective there. So there are no stupid questions in trading or money. Glad to have you, look in, ask. Don't worry about how well you spell or don't spell. We're always happy to have questionnaires. So, and it's let's see how to describe it best, but it is relative one from the other. So when you're looking at those two stochastics, the fast and the slow, we're looking at the relative performance between them, not necessarily their highs and their lows. I hope AA that helps you. And it's a quiet Tuesday, so that's not too bad. So that's where we stand. I'm just waiting to see if you respond back. Good. I hope that made some sense. If it doesn't, I can go deeper into that thought. There we are. And anytime you have a question, just remember in trading, there are no dumb questions, only long or short answers. And so that's the name of the game there. And so, good question. It's a normal question for a lot of people who tune in and have not seen our work. Nah, you don't have to do your best. You're welcome to just ask any question. There are, like I said, in trading and money, there are no dumb questions. There are only long or short answers, and that's the best way to follow that. So there we go. Okay, now, do you have a particular product you'd like to look? Oh, here's go. We got another one. Ernesto. Hi, which tool do you think is the best to use in the newbies to start predicting the use and understanding with candles? Now, that's a good question. I've looked at candles a long time, been involved. I guess it was Nissan. When Nissan moved back from Japan for Merrill Lynch, him and I got together. He was having some problems translating the way candlesticks work in the United States and the products versus, I guess he was more of out of Osaka. Now, Nissan was the head technician in Japan for a long time for Merrill Lynch when Merrill Lynch was in business. And so I've had some good conversations over the decades about candlesticks. We've had some conversations here about them too, and you can go back and look. I think we have a couple YouTubes that we've made talking about the candlesticks. I would do this. I would read the John Murphy book. John Murphy was this really good technician. Let me see if I can put his name up in there somewhere. How do I do that? Let's see, I usually tell people John Murphy. He's passed on now. Wonderful guy, brilliant. Created a dictionary of technical analysis, and he would be the best to read as far as I'm concerned. Nissan, I haven't really seen what Nissan's written in a lot of years, but it wouldn't hurt you to read Nissan. And let me think about candlesticks. Myself, I use candlesticks at times. I like these hinky ashies, but they are a lagging indicator versus a leading indicator, whereas candlesticks are more of a leading indicator itself. So these hinky ashy candlesticks are not necessarily, they're more of a good indicator to the trend. And I think that's the best way to describe that. Uh, I hope that answers some of it. Let me take a look at that question again. A tool, a program, or something. I do see some. There are some programs out there that will like read the shooting stars and hangman, and there's a lot of those in there. Matter of fact, if Ferris comes into the webinar here, or Daniel, both of those traders have a natural tendency to lean into that, and we've done some interesting webinars looking at candlesticks. To that situation. I guess that's about the best way to go with that. So, to actually recommend a software, I don't really chase after any of them to be able to give you a good opinion on that. The best I can do is say, pay attention to Nissan. Nissan's work was pretty good, because remember, candlesticks were created in Osaka, Japan, to trade rice, like in the 13th century. And he was there for a long time. And then when he came over to the United States for Merrill Lynch, he's an American. And when he left Japan, he took over as head technician for Merrill Lynch. And so he's well worth, looking at his work. I'm sure there's some good insight in there. And then John Murphy. John Murphy is probably, even more worth paying attention. John Murphy was a very old technician, a lot of experience. He was on the old Financial News Network / CNBC, and had great insight. He put together a great dictionary to technical analysis when technical analysis was not very popular. When it was considered voodoo, they used to refer to it as voodoo, literally voodoo. When they would do, polls, when polls meant something, back then to money managers, something in the range of anywhere from 7 to 12% of the money managers looked at technical analysis, and the rest of it was fundamentals. Now, in this era, when they do polls on money managers, technical analysis is like in the 60s, like 65%. It's the quantitative algorithmic era is here now, and so looking at a candlestick program is a little hard for me to recommend, solely because I just don't look at them. I'll look to see the shooting stars if I'm paying attention to it. My mathematics is just so much more ahead of candlesticks. I just don't pay attention to it. But if someone gets into a conversation here and wants to go through candlesticks, I'm always open to the idea. I have no problem looking at candlesticks, trying to understand the different signals they describe, and trying to understand them. I find candlesticks to be a very positive tool. So, I guess that's the best way to describe that. I hope that helped out. But do look into those two particular people, and then who knows? Nissan might be around. He might even have a software. Who knows? Anything's possible. And the reason I respect Nissan, not counting the fact that I know Nissan, many years ago. I haven't talked to him in a long while. Because he studied in Osaka, where they created candlesticks, and that's got you got to assume. My first meeting with Nissan, I was invited to go to Merrill Lynch's headquarters at World Trade Center 5 and collaborate with Nissan. John Bollinger had put us together. I guess the famed technician / TV personality that developed Bollinger Bands, and John. All these guys were part of the Market Technicians Association, the American MTA, Market Technicians Association. And that's another thing you could look into is look in the Market Technicians Association. That would not hurt. Um, that's probably like the best way to play it all. All right. I hope I've answered those questions. If you have more, be my guest to ask more. As I always like to say, and I know Daniel and a few of the others around here say it, they hate when I say it's cheaper by the dozen. You can ask up to a dozen questions. It's cheaper. In other words, it's all free anyway. So that's where we are. All right. And if you care to look at any particular product with my mathematics, just shout it out on the chat line, and we'll go right to it and take a look. And that's how we roll around here. Doc loves to look at new products. Remember, I'm going to digress a little bit, and that is that we're in an era where most of the books that are written from the point of view of trading desks or traders on a floor. And those days are pretty much gone. So what you do is you're getting the opinion of reactive versus proactive. And so people who traded on trading floors or trading desks had clients or orders coming at them, so they had to react to them, which made it a lot easier. And I always like to describe how many people are knocking on your door right now where you're trading from, which might be your home, your attic, your basement, your office, somewhere, your car with your cell phone, anything's possible. And you're not a reactive trader, you're a proactive trader. You have to find an idea, not react to somebody asking that they want to buy or sell something to you. And so you have to be careful about what you study or what you read or what you try to learn from. Because if it's a reactive strategy, you're not in a position to be a reactor. Unless you're trading on a trading desk or on a trading floor somewhere or a back office trading floor of some form. And so you have to be very careful to follow those philosophies. Ferris, wasn't it you that follows candlesticks, or was it Daniel? Good morning to you. Good afternoon and good evening to you. So, I think it was you or Daniel, right, that pay attention to the candlesticks and have a little bit more insight into them of what's going on nowadays. So, traders, you got to be careful about reactive versus proactive. We, in this era and time frame, are proactive traders. In other words, we have to make a decision what we're going to make a trade on. A lot of the books, a lot of the stories, a lot of the people giving you opinion are reactive players from the past who like to capitalize on their trading experience, but they're not giving you the correct tools to trade in a proactive world. And so that's definitely important. And that's where we stand with that. And that's where we are. Let's see. I am happy with myself. My account stayed safely consistent despite all the volatility today and yesterday, thanks to the money management rules and discipline. There you go. And that's another very important thing. Stop orders, money management, all the time. All the time. You need those, especially in a world where volatility now is not 1974. It's the volatility of that's another one you have to be careful about. People writing about risk and so forth and margin and stop orders during a overnight session can be incredibly risky. And that is where we're at. And so we, if you have a product we can look at, if not, we'll just keep on rolling along. But it's some good questions there, and you're welcome to keep on asking those questions. Where was I left off? Oh yes. So I'm a little curious to see the euro dropping down, and I'm a little surprised at the strength in the dollar. I saw where I think it was Deutsche Bank, if you can actually quote Deutsche Bank's trading positions, but Deutsche Bank said that they covered their short of the dollar, and now they realize they want to get back into it again. So anything's possible there, which that's like the blind leading the blind when it comes to Deutsche Bank. I mean, they're pretty much owned by the Central Bank of Germany, just like the way Lloyd's of London is owned by the Exchequer or the Central Bank of England, just like Citibank in the United States is owned by the Federal Reserve. In other words, these banks have pretty much gone, and Merrill Lynch, the esteemed old brokerage house of old, basically went belly up and is owned by Bank of America. So we are in an era where if you'd have told somebody 20 years ago Lloyd's of London would go out of business and go bankrupt, you would be like thought a heretic, thinking, oh my God, what kind of idiot is this person? But Lloyd's of London is gone. It's only in name now, just the way Merrill Lynch is only in name now, just the way basically Deutsche Bank is only in name now. And the same thing with Citibank. Citibank's probably like one of the greatest examples. I mean, they had to do a reverse 10-to-1 stock split to make it look like they're still in business. But their high, all-time high, you could basically say is like $670. And basically they trade now in the 40s. So they're down over, what's that, 89%? Something like that. So, I have to laugh at that because no one seems to want to take it seriously. I like it when I say, oh, well, you can buy Citibank now. It's like, why would you buy something like that? They almost trade at bankrupt prices. I mean, they really do. They're double the bankrupt. The official trader opinion about bankrupt pricing stock is if it goes below $3 a share, it's in the bankrupt territory. Well, Citibank trades in the $4 a share, really, $4.70. So, maybe it's at 50 now, who knows, which means it's at the $5 area. It's not exactly the range you would want it to be trading in. You would rather see it trading at, say, $230 a share or $270 a share. That would mean that it's coming out of this malaise, just a 50% retracement would be lovely. $330 right there, that would be fantastic. But anyway, that's where we are. That's the reality we follow. And let's get moving along, I guess, and looking at some of the other sectors of the markets, unless anybody wants to see anything particular. I think what we'll do is we'll go to our dessert when it comes to the currency pairs. We're going to go over and take a look at Turkish lira. You can see yesterday all that news gave it a good drive down, and we did go into the daily sell for one whole day. And you can see Turkish lira now is bouncing back up again, but it did go into the sell. You can see the weekly algorithm has made a nice curve there. Fascinating. We'll see what happens there. The change in the sovereign fund and the finance minister, hence the same person, which was kind of cute. The sovereign fund chairman and the head of the central bank of Turkey is the president's son-in-law, and he resigned for supposedly health reasons. I wonder if he's worried about getting hung or something. I don't know. I guess that would be a health reason. But anyway, in the end result, we have seen that currency since President Erdogan / former Prime Minister Erdogan has taken the currency from 1.5 of the dollar to all the way up to 8.5 to the dollar. That is definitely some type of pounding. They do claim from that article yesterday that Turkey is in a turmoil. I myself just look at it as well. They're just, it is a government policy, obviously, since the same person is in power from the 1.5 range all the way up to the 8.5 range. So obviously it is their policy to allow their currency and their economy to go in that direction. I guess that's the best way to describe it, and being polite at the same time. And so that's where we stand. And let's see what else we got going on there. I guess that's about it, unless we have anybody else that wants to jump in. We are on, when you go over to our fact check spreadsheet, right there. You can see that's line 17. The product now is 49 full weeks in a weekly buy. And woo, we went into a daily sell. How about that? A little correcting. And you can see, let's see where it's at right now. Let's put it up on the J4X. Right there. There we go. Trading back. Did it even dip below the 8s? I guess it did. What did it do? It made the 8 the support, right? So it went down to 799.65 yesterday. And you can see they gapped them up a little bit. No, they didn't. They gapped them down today. And then now they're taking them back up. And where are we at now? We're trading in the, as you can see on J4X, we're trading at 827. And so, and you know, it had to be, I thought was pretty impressive yesterday, is looking at the Turkish lira against the dollar, how the bid offer was relatively tight, which is kind of unique. You know, kind of unique. We've seen where that thing can go 4 or 5 handles wide, where it was only like a handle and a half, 2 handles wide, which is, you know, it says something positive, you know, overall. Now you can see on our work, you know, you can see the candles, the hinky ashy are trying to go minus. You can see here the white line did bounce off of what we call the 3-dimensional 0 line, you know, following our concept over here, where it went to the 0 line, broke down, closed below it, and then now it's bringing it back up, putting it into the intraday or the daily sell, but still in a weekly buy, which means a neutral position for our mathematics. And so what you don't want to do is obviously get short. You could take profits, but you don't want to get short. And unless you're able to trade options, and it's very hard to trade options on this product particularly because I think volatility is at some crazy number like 300% or something like that. So it's pretty hard, and it's hard to get a good bid and offer out of it to begin with. But that is the Turkish lira. You can see the white line is trying to, it tried to move up a little bit again yesterday and then fell back down again. You can see that there. Our work, like I said, is already trying to turn up. This is going to go back into a daily buy. We've got a green dot also at the same time, and we're in a weekly. So this cleaning of the house, I guess you could say, in Istanbul obviously is not going to work out too well because they're already trying to bounce back. And we'll have to see how that plays out a little bit longer. And that's where we stand with that one. All right. Quiet day today, too. Yesterday was really active. I guess everybody wanted to tune in on Monday. And today is a little thin. But we'll see what's going on there. What else can we look at on the currency side? Does anybody have any particular currency pair we'd like to look at? If not, we will drift over to... Oh, I know what I do. Usually I go Canada or Canada. And you can see that the Canadians are trying to put a little charge into the upside here, but overall still showing our longer-term weakness. And you can see it's still trying. It's got the little red dot. Let's take a look at it on J4X to see what they're doing with that today. Right there. It's still red also there. You can see the white line is trying to turn up, but it's been below the dotted line, or the 3-dimensional 0 line, I like to refer to it as, matching up with our sell here, which is nice. So when you can't tune in and see Doc's work, or not go to the Chicago Quant website, you can come to J4X and you can tune in this using the slow stochastic and a fast stochastic D and the CCI just to get a flavor with hinky ashy bars on the chart bars themselves. Cool, cool, or cool. All right, let's dance over to the NASCAD, or the Loonie trade, just to take a quick look of the oil market, and then we'll drift right into the commodities. And as you can see here, NASCAD is lifting. You can see here it's been in a daily buy for 4 days here now, or 3 full days, going on a 4th day. You see we've been in a weekly buy for, how come we don't have a weekly buy on that? Let's put that there. Let's fix that. For a couple of weeks now. Let's go there, let's go there, let's go there. And as you can see on the fact check spreadsheet, over here on line 23, right there, 2 full weeks in a weekly buy. You can see it's in the sheet there. You know how everybody wants to get into fact checking. Well, we're right there. For a decade, you can check it out. Check it out. What it is what it is. And then you can see daily buy for 3 days. So, and we should put a little line in there for that one. I notice I don't even have the sell in there either, do we? Let's see, let's put it in there just to remind the crowd where we stand. Right there, like that. All right, and if anybody's new and watching, they're saying, how's he come up with that? what happens is when the black histogram and the white line move through this 0 line right here, it puts us into a buy, especially with a green dot. If it was a red dot, we would wait for the opening of the next bar. But in this case here, it is a green dot, so it tells us to be long. And then if you notice, the product has a habit of going up. We have an 8.5 out of 10 accuracy rate. And same thing with our weekly trend thing. Now on this one, here's a classic. We get into a sell on a daily, and we go into a weekly buy, and obviously the product goes down. You can't be long because we're in a daily sell right here. They have to coordinate together, traders. They must match together. If they don't match together, you cannot take a position overnight on these things. And so that's where our 8.5 accuracy kicks out. All right, let's see. I don't see any more questions. So now what we will do is we will drift to crude oil. And that's what the NASCAD usually represents, and we'll go right there. It usually represents when it's strong. Let's go back to that just real fast. When it shows strength, no, what is that? That's not NASCAD, is it? That's crude oil. Okay, so let's go to Forex. There we are. When it's moving up in value, normally oil is moving up in value. Let's take a look at oil. Let's go back to that again right there. And you can see here, oil is not moving up in value. They usually march with each other very cutely. That we can't guarantee at all. We just follow it as a characteristic, nothing more than that. And you can see the last couple of days, we were in a sell here. We were in a weekly sell still. You can see that from here, from this area here. This news of the cure gapped enormously up, actually giving us that 1.5 of loss right there, which is, it happens. It has to happen. We don't have a choice. That's the mathematics, and that's how it rolls. Let's move that. This is DEC. Let's see if we can move that. Grab a hold of that. That's DEC oil right there, like that. This is our daily quant, like so. This is our weekly quant. This is all our proprietary mathematics. There we go. And so it's been a real shaker and so forth. Now let's give it a reload, because it's a little surprising that we're still getting red dots out of it, but that's the way it rolls. And we're still in the daily sell. And we're still in the weekly sell. So the pressure is still on, and money management helps you save yourself, but once in a while you got to take a hit around here, and that is it. That is one of our failures, and it has to happen. And you can see, from past events and so forth, successes and failures throughout it all. And when looking at all of it, in the end result, we are 8.5 out of 10 times right. All right, no money management rules and discipline. Yep, exactly. Let's see, what else do we've got going on here? Let's jump over to, was it gold? Gold really fell out of bed also. That was interesting out of that. The virus looked like it was going away. Now you can see here also our weekly is trying to get into the buy. We were in a weekly sell and a daily buy, so that was a neutral. That protected us from that move. Whereas in silver there, December silver, was the other situation. We were in a weekly buy going into the Friday close, but a daily sell, and it's we had put the article out on bar chart / inside futures on Friday if it would close there, but in the end result it did not. It looked like we were going to be in a buy with a weekly buy, and we thought, okay, off to the races, silver's going to take off. And then the news came out, and at the same time on Friday our math had picked up the idea that it was in a sell again. And as you can see right there, see how plot 1 is 0, 0, 0, and plot 4 is minus 0.10, because it's a gas line 3 using just the plot 1 and 4, whereas on plot gas line 5 super, we're looking at plot 1, and we're looking at let's see, let's see if plot 6 is plot 6 is invisible, so it's just plot 1 and plot 4 there too at the same time. So you can see there, plot 1 is a plus 17, plot 4 is a plus 33, and so it in the end result was in a buy, but our daily slid into the sell by the hair of its chinny chin chin. Remember, this is created due to Doc's physics side of his mind, and so the numbers can get incredibly small when we look at our mathematics. because I remember I did design this. You know, sometimes when you go into like when we go and look at, say, like the yen or something like that, it gets horrendously small. Or some of the other products. Let's see if we can find one of them just as an example. Not there. I guess it's a euro, maybe? Euro, it does it. Sometimes it gets incredibly small. Where you can see from 0.0043, it gets really small since we designed this to fight against the Higgs boson back in '77. And so we incorporated it into the market mathematics in 81 when I became a worker bee on the exchange floors. So, all right. A lot of us math people drifted into the financial markets when they legalized listed options. And that's how we all rolled into that. If you didn't go to Silicon Valley, you went to the financial markets. It was one or the other. Take your choice. I myself had no interest in the liberals in Silicon Valley, so I wasn't going to go with that. There we go. And so you can see here on the pressure on the euro dropping underneath the weekly. Matter of fact, we should probably throw that. I could have sworn I did that this morning. I did that for our Chicago Quant page. A little pink thing going on there. There we go. Let's do that right there. And so that's what we do when we're looking at the, let's go back to the commodities, looking at our plot here. And you can see the box there has the plot 1, 2, 3, 4, 5, and 6. And sometimes we are using, when it's a super, we may be using the plot 6. And if it was a super 3.5, it would be the plot 6 up there. But we don't have a plot 6 because it's not a super. Okay. Doesn't look like any more questions, so we will just keep on rolling along through the commodity universe. And so then we drift over to, where do we drift over? We can take a look at the stock indices. You can see the pressure on, what do we have there? We have a sell going on the close of yesterday on the NAS 100, or what Dukascopy refers to, the Tech 100. And you see the pressure on that. You see we went into the weekly buy last week, and it was a wonderful gap up and smack-a-doodle. Same thing going on the S&P 500. Same situation. We came in a weekly and daily buy for the gap up, which would be compensating, obviously, for the crude oil loss. And you can see now they're marching south again a little bit in here. Nothing major. I would imagine, you know, I warned everybody weeks ago that this is how, after the election was going to be, it was going to be one long, crazy lawyer adventure. I know that I said that at the time. I'm sure people were thinking like it was going to last an hour or two, but it's going to last well beyond December 14th, that's for sure. And it'll be a very interesting conclusion at the end. Where are we at now? So there's the two stock indices. We can take a look at Robo. I thought Robo was interesting. The gasoline that we use for our automobiles, that was kind of cool. It was trying to play with the weekly buy there at one point yesterday. Obviously, it has disappeared and is moving back underneath. We've been in a weekly buy since the bottom here. Daily buy, I'm sorry, daily buy. So, and let's reload this and see what they're doing there. Because it seems like they're putting a little pressure on it. I guess it closed in the daily sell there yesterday, so we can do that. Put the line in there like so. And you can see it tried to take it down this morning, and now you can see it's popping back up again. It's going to be very volatile, traders. It's supposed to be. We are going through some, what's the word to look at? I guess the best way to describe it is we are going through some extraordinary times over the last few decades, and it is coming to what I like to refer to as the death rattle. We're coming towards the end of the crazy. So when we look at the Robo-Gas, or we go and look at the NASDAQ future, you can see here, let's reload that. You can see that it is volatile, and it's going to be that way until they get all this figured out. I thought it was very interesting to see the head of the election department of the Justice Department resign, not willing to do his job. It's like, no wonder we're having all these problems. The guy's not really willing to do his work. So good riddance. And another one of those career people that was put in the office and refuses to do their job. So good riddance. I got that done right there, yeah. And then let's just double check again the S&P, same situation, and reload it. I don't think we reloaded it when I put the red line in there. You can see the pressure. No, it's just a little bit underneath. Fascinating opening yesterday. The Dow Jones up 1,600 points. That obviously the virus resolution is a very positive factor. There's $4.5 trillion sitting on the sidelines by institutions not invested in more than, say, treasuries. And so that's not exactly the way to keep your investors happy. That usually freaks them out. Actually, that's usually the way that plays out. It definitely freaks them out because they hand you their money. When I was young and involved in the hedge fund industry back in 2001 and 2 and so forth, 3 and 4 and 5, they like the idea of you making money, not parked money. They can park it themselves. They want the money to be invested, and when they don't have it invested, they're really ornery in those meetings. Like, why are we paying you 2 and 3% if you're not investing our money? We can put them in treasury bills, and so that's the dance that goes on, and it doesn't seem to ever stop. Right there, there's the crude oil. I'm just making sure these things are all updated since we've shown them to you. Let's make sure they're all updated, and we just reload them. And I don't see any questions kicking out. So as long as there's no questions kicking out, I'll just keep on bootlegging or going through my rhythm that I always do to look at what's going on. And that's there. So let's go like this. We'll just save that chart so that we're prepared for Chicago Quant after the webinar. Let's see, where is that? That's crude oil, right? Yes. So we just go like that and double click on that. Boom. All right. And then there's the gold. And we did that, so let's reload that. Now that we're going to put a little circle in here because gold is doing a little Herculean effort there, trying to get moving into the buy. So that's pretty cool. We went into the sell up in here at the all-time highs. Let's see if we can contract that back a little bit, like so. We went into the daily sell up in here at all-time highs. Took a while to get us into the weekly sell, and then that was the second breakdown, which a lot of Elliott Wave people would say this is the A, B, and then the C. And then we were starting, that's the A as an overall A, then this could be the B, and that could have looked like a C. We thought we were going to see a challenge, at least these highs in here. And then the news came out, so the panic, I guess you could say, of or the lack of panic, because now we have a cure, which is a nice thing to have. It's funny how some people don't want the cure. I mean, I'm not talking about inoculation. I mean, I'm a freewheeling libertarian / GOP guy, and it is interesting that you would think that they'd be happy that somebody can have it if they want it, and it's not my right to tell somebody else that they can't have it. But in our politically correct universe here, and our cancel out culture here. And across the globe, people think that they should be able to tell other people how they're supposed to live their lives. I myself always take the attitude of live free or die. I've been that way for many decades, and I'm going to stay that way until we hit that die point. And that's the way we roll around here. So you can see how the markets reacted. Gold fell apart from the success news, which is fine. In other words, it's a place of last resort to be invested. So, of course, they would be dumping it. And when it came to the stock market, did we save that? Let me think if we go just double check to see if we saved that. And we go like that. Gold right there. And you can see when it came to the stock markets, obviously they zoomed to the moon, Alice. And, that meant that they were happy. And when you have $4.5 trillion invested, in treasury bonds, which is basically losing money, that's not counting the $15.5 trillion across the globe that are invested in minus returns. They're buying. If you want to buy a bond, a short-term bond in Switzerland, you have to pay for it. You don't derive interest from it. You actually have to pay for it. And the same thing goes with our Social Security system here in the United States. There are times where our money is being invested in Social Security in a minus. So we pay to be invested. We're not getting a return on capital. That's the way Social Security is created in the United States. It's a pyramid structure, and so the money is not invested; it is stored, and so that means it only can be put into Treasury bills. Imagine if we had allowed it over the last 60 years or 70 years or whatever it is now since the 30s of Social Security, 90 years. If we had allowed it to be invested in U.S. Treasury bonds, how about that? Just a change of the word, bond versus bill. A bond yields 4.5%, 5% throughout that whole era. At one point, it was up to 20%. We would have been deriving a return. Social Security recipients would be receiving 2.5 to 3 times more money a month if it was only invested in U.S. bonds, not U.S. bills. And so it still functions that way every day. I like that. Thank you, Robin. Good morning to you. The Doc tutoring. Yes, indeed. Yes, indeed. Robin is a partner of mine at the Chicago Quant Technologies. I like that. Thank you for tuning in this morning and kicking the tires. I like that. It is what we do here. It's one way to fight the false spin media, especially in the financial markets. I shake my head all the time at that. I just cannot take it anymore. And here we have to broadcast out of Europa, and basically to get the word out honestly across the planet about real financial markets, about real situations. Robin and I have a combination of almost 100 years of in market experience. So I think skip the word investing. We're beyond that. We're market experience people. We know pretty much anything and everything about the markets, and what we don't know, we can usually go find somebody that can tell us what we need to know. And so that's why we do the webinars. It's fun. It's a way to get the real word out there, and it's a nice little, it's a nice little gig. It's always entertaining. The Swiss treat me very nice. Dukascopy and Latvia treat me very nice. And so it's nice to have people that care about the markets, not about the spin. And that's where we are. All right. Let's see. What else are we looking at here today? We're in the if anybody does want to see anything through the eyes of our mathematics, just give us a yell, and we will, just throw it up on the chat line. You don't have to say anything more than the symbols, and we will chase it. And let's see where we are. There is the 10-year note / bond. That's where we start to divide between. It goes T-bills from bills to notes to bonds. If they would have been only invested in notes, the average Social Security recipient would have been receiving 1.9% more. In other words, almost twice the amount a month that they receive now. But for some reason, in the wisdom of Mr. Roosevelt and the Democrat Party, they saw it as a good idea to give you no investment return whatsoever. For whatever I guess that's how they used it as a slush fund. They use it instead, and they knew that slowly they would get away with that, and they did. And that's the way it rolls. Let's see. Let's do this too. Let's do that. There we are, and we can stretch that out. That is the 10-year note. You can see we've been in a sell here since the weekly sell. We went into a daily sell. Told us to take our profits here. It went up. Told us to get back into that short again. Made money. Didn't have to lose any money here because it told us not to. And then again, it was in a short all the way down to here because we were in a weekly sell and a daily sell. And then it went into the buy. It told us to take the profits again. And then so for you shorter term traders, again, it went into a sell here. And you didn't lose any money here because, again, the math was telling us, and that's at 8.5. And historically, that's how our math is rolled in the financial markets. We've back tested it against like the Dow Jones Industrial Average, hence my nickname. One day I walked on the trading floor and people started calling me DocDow. I was like, what? What's DocDow? You're the doctor of the Dow. I am I? Okay. And so you can see here with our math, we've been doing it on the Dow for a long time here. Let's see, I need to save this. Let's save this. And there we go. Save the image. Feel the rhythm. Feel the beat. I was selling out at Cowtown last Saturday for my son. And I went to get breakfast at the Jamaican restaurant. And it was a wonderful conversation. Feel the rhythm. Feel the beat. Doc was a teacher in Jamaica back in the 70s. Pepin Institute, and I taught at Bog Walk. Feel the rhythm, man. Feel the beat. All right, and there's natural gas. Natural gas has been fascinating. It has gone a little awry at times here. You can see we've been in a weekly sell all the way back into here. And you can see the upwardly slope against it, but the daily sell kept us safe. It tried to pop a little bit there, but you couldn't get long because, again, hence, in a weekly sell. And then it gave us the short here, and a couple days later, it was definitely gratification, that's for sure. And then it jumped again and tried to give us the buy signal, again, in weekly sell. And then now the dance is on the downside here. You see that right there. Not a big move, really, but this was a heck of a move, but we just could not, the math just refused to adjust. I guess there was some real conflicting battles going on there between producers and users. But the math always straightens it out. It's kind of like the pass line on crap table. You just keep on doubling up until it gives you your money back. All right, where else are we now? Now, what should we describe today's title, too? We're coming to the end of the webinar. How about, it's this, Robin says, we can send you our analysis free tutorial. Cool. We should call it the Docs Math Explained, or let's see, I guess quantitative trading explained. I like that one better. Quantitative trading explained. I talked about proactive versus reactive. We talked about what was I looking at? Oh, let me save this. Let's reload it too. Save. Right, where's that? Natural gas. I think that's natural gas right there. There it is. Nat gas. And so we're going to call this title, what are we going to call this title? We're going to call it Quantitative Reactive versus Proactive. How's that? I think that sounds like, that's cool. Doc's always doing something fun. Quant trading, reactive versus proactive. I think that's legit. You would derive what I mumbled about in this webinar about that. Well, that would be a good way of saying. It may be too long. If it is, Giannis will let me know. Or I was ready to say Kate. DC will let me know. Anna will let me know. Polina. When I see Anna, I think of Polina. I think of Greta, too. God, Dukascopy has some really great women working for the organization and running the webinars. It's really nice to see. Giannis is their head analyst. Good people. All good people. Dukascopy is a safe place to run to. All right. Doc is going to say arrivederci. The singing trader. Happy trails to you. Until we'll meet again, which will be Happy Hump Day Wednesday. Happy trails to you. To